Assalamu alaikum warahmatullahi wabarakatuh. Hello, let me introduce myself. My name is Rara Zajeng Pratawi. From Accounting 23A, with NPM 234120008, here I want to explain about input tax and output tax. Definition of input tax. Input tax is the value-added tax, VAT, paid by taxable entrepreneurs, PKP, when purchasing goods or services subject to VAT for business purposes. The function of input tax is to help companies avoid double taxation, as companies will only be charged VAT on the added value they generate from the production or distribution process. Type of input tax. 1. Income tax, PPH. PPH is imposed on income received by individuals or businesses within one tax year. The main legal basis is Law No. 36 of 2008 concerning income tax, UUPPH, with amendments outlined in the HPP law. The PPH rate for individuals is progressive, 5% for income up to 60 Indonesian rupiah million. 2. Tax on dividends. Dividends received by individuals are taxed based on the PPH rate provisions. However, there is an exemption facility if the dividends are reinvested in Indonesia according to the HPP law. Definition of output tax. Output tax is the tax that we add to the price of goods or services when selling them to buyers. This tax must later be paid to the government. Why is there output tax? This tax shows that we as sellers help collect taxes for the country. The money is used for development, such as roads, schools, or hospitals. Type OD. Output tax. 1. VAT is a levy imposed on every process of production and distribution. 2. Luxury goods tax is a tax imposed on luxury goods to producers for producing or importing goods in their business activities or work. Characteristic. 1. Indirect taxes are collected through intermediaries, but are borne by consumers. 2. Regressive burden. The tax burden tends to be heavier for low-income communities because it is imposed proportionally on consumption. 3. Based on consumption, taxes are imposed on the expenditure or consumption of goods and services, not on income. Principle of input tax credit. Article 9 of the VAT Law 1. If in a tax period, output tax is greater than input tax, the difference constitutes the value-added tax that must be paid by the taxable entrepreneur. A. The payment of value-added tax by the taxable entrepreneur must be made no later than the end of the following month after the end of the tax period and before the value-added tax period notification is submitted. B. The value-added tax period notification must be submitted no later than the end of the following month after the end of the tax period. 2. If in a tax period, the input tax that can be credited is greater than the output tax, the difference is the excess tax that is compensated to the next tax period. 3. A refund request for the excess input tax can be submitted at the end of the fiscal year. Included in the definition of the end of the fiscal year in this provision is the period. Thanks to watching. If there are mistake, I am so sorry, and I close. Wassalamu alaikum warahmatullahi wabarakatuh.